On 25th of March 2025, the Albanese Labour government unveiled personal income tax cuts as part of the federal budget, and things moved quickly. Just one day later, the changes passed Parliament. It wasn't just an election promise, it is now officially law. In this video, I'll break down what's actually changed, from the new personal income tax cuts to the updated Medicare levy thresholds and a fresh round of instant asset write-offs for small businesses. Let's start with the personal income tax cuts. The government is cutting the lowest income tax rate, which applies to income between $18,201 and $45,000. Right now, the tax rate is 16%. From 1st of July 2026, it will drop to 15%. And then from 1st of July 2027, it drops again, down to 14%. It's important to know that these tax cuts are permanent. They are not temporary offsets or one-off bonuses. Once the rate drops, they will stay there unless a future government decides to change them again through new legislation. So everyone earning above $18,200, or more accurately, the effective tax-free threshold, which is $22,575, will receive a tax cut. I have covered how that works in a separate video, so check them out if you're curious. The dollar savings are exactly the same for anyone with taxable income of $45,000 or more, because that's where the full tax cut kicks in. If someone earns less than $45,000, their savings will be smaller, simply because less of their income is taxed in that bracket. But here's the key: as a percentage of tax paid, the tax savings make a bigger difference to low and middle income earners. That's where the impact is really felt. Off the back of several rounds of tax cuts, Stage 1 in 2018, Stage 2 in 2020, and Stage 3, which took effect from 1st of July 2024, the latest change might seem modest, but it's aimed at easing the pressure just a little more for lower and middle income earners. Now let's talk about the Medicare levy. Most people in Australia pay an extra 2% of their taxable income to help fund the public health care system. That's what we call the Medicare levy. But if you are on a low income, there is a threshold below which you don't pay the Medicare levy at all. And if your income falls between the lower and upper thresholds, you only pay part of it. As part of the latest changes, the government is increasing those low-income thresholds by 4.7% for singles, families, and seniors and pensioners, starting from 1st of July 2024. It means over 1 million Australians on low incomes will continue to be exempt from paying the levy, or will pay less than before. This is a targeted form of cost of living relief, helping protect those doing the toughest from additional tax. Now, a quick update for small business owners. The bill that includes the instant asset write-off changes has now officially become law, which means there is some much-needed certainty for the 2024 and 25 financial year. Here's a key point. Eligible small businesses can immediately deduct the full cost of assets costing less than $20,000 purchased and installed between 1st of July 2024 and 30th of June 2025. This measure aims to support business investment and improve cash flow, especially for tradies, sole traders, and small operators replacing or upgrading equipment. The ATO has already updated its website with the latest changes, so if you are a small business owner, it's worth checking to see if you are eligible and how it could benefit you. Now you're across the latest updates, if you're thinking about planning ahead on individual side, make sure to watch my video on what you didn't know about Australia's tax-free threshold. I break down why the effective tax-free threshold, not just the headline number, really matters when it comes to smarter tax planning. Thanks for watching, I'll see you over there.